Good morning. I'm Vince Lancy, and this is the Goldfix Morning Market Rundown. There's our homepage. Let's do the markets. 10-year yields are 4.30, down a whopping 10. The dollar is 99.08, down 55. The S&P 500 is 54.06, up 121 after a really strong day yesterday. The VIX is 28.18, down over 2.25%, or 7.75% if you're looking at it that way. Gold is 33.22, down $57.58. Silver is 32.85, up 42 cents. That's not a mispronunciation. Someone is unwinding a gold silver spread in a big way. We believe we know who it is now, but that's another conversation. Copper is also up 144 in percentage terms, trading 489. WTI is 64.17, up 19 cents. Natural gas is 303, unchanged, almost perfectly, 303.70. Bitcoin 93,400, down 11 after a monster day yesterday. Palladium 941 and change, up 12. Platinum 966 and change, up 940. Gold, silver 101, down almost 3%, or almost 3 points. Soybeans 1033, up 1. Corn 470, down 2. And wheat 545 continues lower, down 1. All right, so there's the homepage. Last night, April 22nd, JP Morgan joined the 4,000 Club in gold. We're going to report some news here. Mainstream media outlets, CNBC, Reuters, and a couple other places had summaries of their report, basically calling for 4,000. We're going to do something like that for you today, and we'll do a full breakdown later in the week. But we want to get some of the important points out there, especially as gold is doing what it's doing. That's the first conversation. The second conversation will be, as you can guess, market risks. First, this is what we put out yesterday, a little bit of a taste there. This morning, we actually sent the post out. That's an unlocked post. JP Morgan joins the 4,000 Gold Club. That's basically a news item. A bank asks, did we just enter a new front for uncertainty for gold? That bank was RBC. There's the welcome story we did yesterday, basically taking stock of gold's move. It was at the extremes, so this is not a surprise for those of us keeping an eye on things. Banks take note. That's multiple banks. The COMEX open interest and speculative biz is now in China. Two banks take specific note of the fact that there are less American speculative hedge funds playing on the long side. In fact, we've noted that for the last month that American macro funds have been selling the rally. And they've been selling probably to bullion banks that have been covering shorts. And then we have a little important founder's note there at the bottom. You can guess what that's about based on the picture. Okay, the story. JP Morgan says 4,000, that's a quote, 4,000 is coming. Here's the how and why. JP Morgan has officially added its name to the growing list of institutions forecasting a dramatic repricing in gold. According to the bank's latest note, gold is set to cross the 4,000 per ounce threshold by the second quarter of 2026. Their base case sees a rise to an average of 36.75 per ounce by Q4 2025, followed by continued upside momentum. But it is not just the level that matters in their report. It's the path, the pace, and the drivers that make this forecast notable. The graphic you're looking at there, that's the share of U.S. dollar reserves held in official FX reserves. It has fallen to 57.8%, while gold reserves as a share of total reserves has risen towards 20%. U.S. dollar, light blue line, gold, and the black line. quote, they say, in late March, we examined the structural shift in gold's demand and geopolitically influenced pricing drivers, ultimately asking if 4,000 per ounce was in the cards. After the upheaval of the first 3 weeks of April, our answer is yes. Yes, we had that report and shared it with premium subscribers. Essentially, that report was, in retrospect, a precursor to this report, and they were letting people know they were looking at it in that respect. You may remember, you may not remember, JP Morgan had been reticent to raise its target for the last 3 months, even while Goldman and other banks did so. Silver, often treated as a leveraged play on gold or a bet on industrial recovery, is expected to underperform in the near term. JP Morgan cites industrial demand uncertainty as a headwind through early 2025. However, the bank expects a catch-up window to open in the second half of the year, pushing silver towards $39 a year by year end. This implies a two-speed market. Gold repricing for regime change, silver still trading on cyclical cues. Bottom line, slow and steady higher for gold, and silver with fits and starts. That's a very cursory analysis or coverage. That's a news story. We have that full story linked at the bottom. JP Morgan joins the 4,000 Club. Again, we will have full analysis and coverage and breakdown for that report later in the week. Markets recap, stocks ended higher as strong earnings overshadowed tariff worries and Trump's Fed criticism, while the dollar rose following Treasury Secretary Bessent's comments hinting at easing U.S. trade tensions. Long-term Treasury yields dipped amid mixed safe haven demand. Gold pulled back after crossing 3,500. Oil prices gained, lifted by new Iran sanctions and an equities rally. Canada's main stock index also ended higher as investors took a breather after the previous session's decline that was triggered by U.S. President Donald Trump's recent attacks on Fed Chair Jerome Powell. Toronto Stock Exchange ended up 1.25% at 24.305 points. Market news, there are a lot of stories out there, but these are just three that we thought were relevant to everyone's interest. Barrick Gold sells Alaska Mine. OpenAI would buy Google's Chrome. Exec testifies at trial, and 3M beats first quarter estimates. Right? Why? Well, this is gold. That's why it's in there. Right? Why is the OpenAI one relevant? Well, OpenAI, ChatGPT, anyone who's got an LLM, a language learning model, a learning model, an AI model, seeks for distribution now. And if you want to have distribution as well as real-time data, you want to be on a social media platform like Grok is, right? Or you want to be paired with a browser like OpenAI seeks to. So you could see OpenAI or ChatGPT move to take its superior tech, I'm putting that in quotes, and saying, well, how do we get it out there? Otherwise, they're going to end up like a Sony Betamax, and no one's going to use it because no one really sees it, and their data will lag because they're not getting fresh data. We're talking about a self-reinforcing cycle right now. Anyway, 3M beats first quarter estimates, flags a potential tariff hit on 2025 profit. We don't know much about 3M lately. We used to follow it closely. And 3M and companies like 3M, you have to look up the other ones. A couple of our founders have been talking about it with us. Those type of companies are going to do well. The 3Ms of the world, of the U.S. Data on deck. Today's Wednesday, S&P Flash U.S. Services PMI. And we're making short order of it today because we want to move on to the risk and talk about a couple things there. Okay, so what happened yesterday, this actually came up in conversation with my students in class last night. What happened yesterday was the day started. You may remember yesterday morning, if you listen, one of the first things I said was, hey, coming on the tape right now, Goldman's CEO, Solomon, said it would be nice if the administration said something, give us an update on it. And I pointed that was an important thing. That was Wall Street saying, hey, too much uncertainty, you have to give us a bone. And later on in the day, Scott Bessent did. Now, was that a coincidence? There's the point. They asked a question when the answer is ready to come. So the answer came. And the answer you may not agree with it may not satisfy you in terms of meat on the bone, but it satisfied the market. Stocks turned up, gold turned down harshly, and silver actually went up. The dollar, wasn't a big deal yesterday, but 10-year yields also stabilized. So, I mean, the dollar was down, right? That's what you expect. Here's the scenario, how this plays out. If there is meat on the bone to what the Secretary of Treasury and Trump later reiterated said, then that creates certainty. Certainty creates permission for Powell to ease to stave off a recession. That's why stocks rallied. A little bit of certainty, stocks rally because, okay, stocks rally, then Powell can ease. So the talk and the conversation about Trump getting Powell fired, well, even the bank analysts are focusing on that now. And we're saying you can focus on it for entertainment purposes, but Trump cannot fire Powell. He, however, can get him fired or get him to quit because it is a political position, whether people admit it or not. And you don't want to work for someone who doesn't want you to work for him. Anyway, it's just Trump probably, I'm guessing, speculatively speaking here, it's what Trump does. That's the bad cop. And the good cop is that he has a deal, or hopefully has a deal. So Powell's going to ease anyway because of the fundamentals behind the certainty increasing. But it looks like Trump, bullied him into it. So it's a game that people play. But the reality of it is the markets all took Scott Bessent's statements to heart. Now they've done that before and been disappointed, but this is day 2 and they're not disappointed yet. I would suspect the fact that, giving you a little bit of a meta-analysis here, the fact that Wall Street asked the question and got the response in the same day is a good sign. Trump has a style of dominating the news cycle. And so when he doesn't dominate the news cycle, that's making people freak out. Even if he's redirecting you or changing your opinion on things or talking about Greenland, let's talk about the Panama Canal. The fact that he's in the news cycle means that he knows what he's doing. He may be steering you in ways that you want to go, but he knows what he's doing. It's when he drops out of the news cycle altogether while in negotiations that you get concerned, and Wall Street voicing that concern, and Scott Bessent responding in a good cop way, by the way, was the first sign. The second sign was Politico pushed back immediately, I think on the same day, within the same 4 hours, and said, yeah, but it's going to take 4 to 6 months. To which Trump replied, the tariffs won't be 145%. So there you have it. The counterpunching Trump is the Trump that's in a better place to get all this done. And so the market really likes that. But let's see what happens. In terms of gold, well, that's a lightsaber, meaning that's a shooting star. Okay? Unless we can get above, the shooting star is the obvious part. I'll give it to you in a way that's probably a little bit more practical. This is a trend week lower. A trend week lower. A trend week is a week that starts on Monday and does nothing. And then a week that on the second or third day starts to make cascading lows. And by the end of the second day, if it does not get back to, let's say, unchanged on the day, then the rest of the week is going to be people selling rallies, not buying dips. Now, that's how a trend week works. And I mentioned that we could be in one yesterday. It looks like we're in one now. How much lower could we go? Well, you should start looking at things like this. That's a return to trend, 3,200. 3,200 is a return to trend, okay? This cannot last. Look, this is how the market changes speeds. Right? 20 degrees, 40 degrees, 60 degrees, 85 degrees. The market needs to get back to normal. Is normal here? I hope not. Is normal here? Could be. Is normal here? That would be cool too. So that's what's going on. Gold and silver, we've said for years now, with no one else joining us. But as traders with a history of literally trading this item, speculators that are bullish gold for geopolitical reasons will frequently buy gold and sell silver. And so that even though silver climbed in the rally, it was a laggard for sure. You expect silver to take the lead after a while, and it did not do that. Now you're seeing silver rally even as gold drops off. Well, that's because anyone who was long gold was hedging their gold by being short silver, because silver in their minds was not going to benefit as much from a stagflation or geopolitical problem as gold did. It was the perfect trade. We've had this on many times, frequently the wrong way, but it was the perfect trade. And when you see these massive spikes in gold, silver, here, I'll throw one up there. When you see things like this, let's go to the weekly so you get a better. When you see this, people are going to take profits, right? Okay. People take profits when they see stuff like that. We'll go to the monthly and get a better historical perspective. I have some channels. I redid my channels. There's an old channel. The new channel is now basically the old channel put at a lower range. I had a channel here. It just kind of sloped up a little bit. But there you have it. Gets out of control here. People take it off and people put it on. And with copper up, look, if I'm looking at copper up 2%, 1%, I'm like, well, you know what? This is crazy. Sell gold, buy silver. Same trade the other way works. Problem is the normies don't buy silver when they're bullish the economy. They buy stocks. They will sell silver. So circling back, JP Morgan has joined the 4,000 club, leapfrogging over their peers, Goldman Sachs, UBS, Bank of America, firmly saying $4,000 is where we're headed by the end of 2026. But usually, not usually, but ostensibly, it's going to happen by mid-year, according to them. Silver will be a laggard, but by the second half of this year, it's going to go to $39, according to the bank. That's it. I'm Vince. Look for a full analysis on this later in the week, on that report later in the week.